Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it. It's generally related to building commodities and or financial topics. Let's dive in there. Let's take a look, see what people are sharing. If you want to follow me at Finance, and if you want to join our community, find I dive deeper into all of these topics, looking for potential investment opportunities and sharing all of those opportunities with the community. I also go over a lot of trainings. We just recently went over training on portfolio allocation and also some of the strategies that I use for buying pullbacks. Some ones that are coming up that people have talked about me is potentially past successes and failures, uh, researching the fundamentals of a company, risks for each of these sectors, and there's more than that too. TradingView tutorial of how to use TradingView is another one that people are asking about. So if those are some things that you're interested in learning about, you can obviously sign up. And if you're interested in learning something else, you can also bring that up to me and we can go over that and I can give you my opinions. So momentum structural analysis, this is Michael Oliver. He says this is the third and dumbest bubble in the past 30 years. At least the internet bubble was predicated on companies providing an actual service, real infrastructure, and tech that immediately changed how we all live. It didn't take 15 years of trust me, bro. If you buy Fartcoin, you might as well buy Call of Duty gun skins and call it an investment in a new asset category. I completely agree. And the only reason I'm talking about this and bringing this up, and I know some people may not be interested, the reason I'm bringing this up is because we are in a bubble. This is what it looks like. And the reason I know that we are in a bubble, and the reason that Michael Oliver also knows, is because we follow the cycles. And when retail gets involved and does this, they're going to the extent of being, if you've ever heard the movie Tropic Thunder, you never go full retard. We are going past full retard. And nothing against anyone who's retarded. That's just the saying from the movie. But just don't go full retard, guys. Don't go full retard. Fartcoin, that is pigging the full retard meter. So, yes, this is really dumb. And I will share some stuff that pertains to all this as we go through this bubble so you can identify future bubbles and you can identify where things are low in the cycle. Momentum structural analysis says put this one up there with gold asteroids in Zimbabwe finding a Googleplex gold deposits. And Market Sniper says, is this a bad troll? Is this the new MO for every MO554D controlled small nation that is conned into a Bitcoin standard? Sudden declarations of mega gold finds makes me so bullish that they need to do this. Trying that hard to keep a bid under their Bitcoin with XAU supply tails and other undermining BS. Open those mines, dig it all up, refine it, good luck. I'm there to buy it up. Let's see what cost and how long it takes you. These psyops are like bad April Fool's Day jokes nowadays. And this is the El Salvador has discovered 3 trillion in unmined gold. Guys, they are trying to get you away from gold. They're trying to get you out of silver and they're trying to guide you to Bitcoin. And then what they do on the back end of that demand of Bitcoin is they buy United States Treasury bonds. It is one big funneling of full retard people going right at Bitcoin and Fartcoin and all these stupid coins. And then they're generating demand for Treasury bonds in the back door. That's what's going on. Market Sniper sees it. We also, Michael Oliver sees it. I don't know what's so hard. And then everybody's like, well, go look at the white paper. I'm like, guys, this is just, I'll go over some more stuff. Mike Elkin talking about uranium. It says, so let's take these assumptions here. Assume no demand from SMRs, the small modular reactors. Assume the Kazakhs go crazy, 75, 80 million pounds. Cameco just ripping it and produces all out. Bring on Arrow and Denison on schedule and other smaller projects. And guess what you get? You've still got deficits. So, what am I going to say here? Well, that to me smells like coal and natural gas demand because I don't think we can make up this demand. Sure, uranium's going to move, and sure, some of those companies are going to move. But in reality, that means more natural gas and more coal demand. Now, someone was talking about, we're gonna build all this, liquefied natural gas terminals. We have AI data centers going right next to these big natural gas fields. Goring and Rosenzweig just came out and said that oil and potentially oil and potentially natural gas have peaked shale in the United States. If that is correct and we get a peak in oil and natural gas from shale, it's over, guys. This entire market dynamic will change rapidly. We're going to see rapid increase in interest rates if he is right. And we're going to see precious metals, oil, and all this stuff go up. It's all going to go up. Just like the 1970s and just like the 2000s. 1970 was the peak oil of conventional United States. In the 2000s was peak conventional oil of the world. And now what is coming up could be, and I don't know the time frame perfectly, it could be peak oil of everything. Now, if that is the case, and Goring and Rosenzweig are correct in their models, which it's going to be tough to know until it's behind us, that changes the entire investment dynamic of everything we've ever looked at. Bonds and currencies are going to eat it. That is also probably why interest rates have concluded the 40-year downtrend line to an uptrend. And a lot of the investments are going to be commodity driven, but I think it's going to be selective commodities. Oil, natural gas, all the energy stuff, and coal's probably going to do something crazy. That is if we hit that. Now, here's the thing. That's an if to the upside. We don't need that to occur. Maybe we bring on sufficient supplies and that works. But what I will say is, if you're interested in reading about peak oil, read the most recent Goring and Rosenzweig article. You will then understand that even if you have an infinite field, if you hold your rig count steady, you still will hit a maximum production. The thing is, we don't have infinite fields, and our fields have different quality. We've got tier 1 acreage, tier 2, and so on. And as we drill through all of this, we could hit rapid decline rates at some point, which are really going to slow down production. And no matter how much more drilling you do, you will never reverse the declines when we hit that point, wherever that point is, no matter how much drilling. And that will completely change the investment game in this world for a period of time. Scottie Pippen. What is Scottie Pippen doing here? Scottie Pippen, Satoshi Nakamoto, came to me in a dream last night and handed me Santa's list. I saw Bitcoin next to Gates and Bezos. History's being written. Are you kidding me? Really? This has got to be a top soon here. It's got to be. What I dreamed in my dream, Satoshi Nakamoto came to me and he says, "You know what? I think this Bitcoin stinks." And I just said back to him, "Nope, that is Fartcoin, buddy. That is Fartcoin." But he didn't live to see it, so he just didn't know about Fartcoin, guys. Markets of mayhem, life expectancy versus healthcare costs. It says it's no wonder people are frustrated with their healthcare in the United States. We, on average, live shorter lives and pay more for healthcare than our peers in our developed countries. Imagine that. Well, here's my question. If you have shorter life expectancies and you have crappier health, Your health is being driven by a few things: what you eat and what you do, and how much sunlight you get, and all that other stuff. If you're sick, you're going to obviously spend more on healthcare. So, yes, it makes sense. And if you have high demand for healthcare because everyone is eating crappy foods, then yeah, it makes sense. A lot of the foods that we eat today did not exist 100 or 200 years ago. Our genetics are saying, WTF, what is this in my body? It doesn't know what to do with it. So come on, guys. Eat healthy, get some sunlight, lift some weights. Let's bring this back up towards these other countries. Deals with the food, guys. Coming on, we've got Michael R. Sullivan. MicroStrategy makes altcoins obsolete. Says these scams attract people with the promise of outsized returns, but this era is over. As Bitcoin becomes financialized, tools exist that allow speculators 1,000x returns from options on top of MSTR with a tiny capital requirement. Here's my question. This guy stands here and he says, these scams, which are altcoins, attract people with the promise of outsized returns, but this era is over. So my question back to Michael, how do you know Bitcoin isn't an altcoin? How does he not understand that? To me, all cryptocurrencies are alternative coins. They're alternative digits on a screen that are trying to replicate gold and silver in a digital form. So let's keep going. If you pay more than this, you will never be able to retire early or be work optional before the retirement age of 65. Any of you paying more than you should based on your income. Well, I hate to say it, but your income goes up. It doesn't stay stagnant. So this is what you may want to pay if your income is here today. But in the future, you might be making 100 today and you might make 150 out in the future. So the 100K that you make at 2000 mortgage is great if you're paying a 2000 mortgage and making 150. So be careful what you read here. It's a combination of things. Also, you can take a mortgage today, and if interest rates go down, you might have a 100K salary today, and your payment is 2,083, but you could refinance it down to 1458. I refinanced mine way down with time. So this isn't stagnant. This is just a static time in history where you take a snapshot in time, but in the future, it could be very drastic. What if you refinance? Let's just say interest rates do go down, and I don't know if they will. But if they went down and you paid a 1250 mortgage and your salary went to 150, well, now you're paying less than half of what your max mortgage is. Now you're in the gravy train. That's exactly what happened to me. It went way down. In fact, I'm more towards this end over here. And my income went up as time goes on because I invest my money. I get all this dividend income that just keeps piling in, and I reinvest those dividends and snowball the dividends. So my expenses went this way, and my income's going this way. And it's going up and up and up and up. And hopefully I just keep going off this scale where I'm way off the scale and I've got this stupid little payment down here that's like as much as what it'll be. My mortgage rate in probably 10 years will be cheaper than how much gas I spend in a month. Like that's what it's going to end up being. So Jack Presley, biggest Ponzi scheme ever. 2% on 93% of it. It says any other crypto does the same thing. For one to be worth 0.01 and another to be 100,000 is pure hype. Pure hype. So he looked into Bitcoin. Blockchain is great as a ledger and not that revolutionary. I might add, since we've been using private public keys since 1973, but Bitcoin is nothing. It's just randomly generated hexadecimal numbers and nothing else. Anyone can replicate Bitcoin. Bitcoin doesn't even have a $10 value, let alone $25,000 value. I can generate a trillion randomly generated 256-bit numbers a day. If I sell each for $1, it'd be a trillionaire in a day. Stop supporting this Ponzi scheme. You are doing everyone a disservice. I don't like central banksters a bit, but Bitcoin is even a bigger Ponzi than the Fed itself. There you go. That's all it is. It's just digits on a screen. It's zeros and ones in a hexadecimal system. Now, how many people actually know what a hexadecimal system is? You probably don't even know. Go look it up. Go search it. This is exactly my exact thoughts on it. Wanted to share that. It's easy to get lulled to sleep when things go quiet. Don't be blind to the opportunity presented in a structural shift to reflation. It is early days, and this is the commodities ETF USCI. Big move up, consolidation, and we are starting the second leg up with this USCI uh, movement here, that ETF. There's other ones that haven't broken out yet, like some of the energy stuff is in the process. So XLE is sitting on top of everything. XOP is also broken out, but it hasn't broken its big neckline. So we're right there trying to break out of everything in across all of these. I love this one, rock bottom. Good job. Silver over Bitcoin going forward. So the mother of all bullish falling wedges. Here's your falling wedge coming up, and we're coming into the corner here where silver is going to outperform Bitcoin. And this is the bullish divergence here coming up. Now, you guys have heard me say this, that Bitcoin is probably an extension of the bubble in the NASDAQ. This is your proof of work of it. This is proof that that could be the case. Now, obviously, we haven't broken out to the upside, and this could very well break to the downside and do a false breakdown, and it's going to get everybody confused. The cycle is still behind this. Even if we get this pattern, the cycle's still driving, and we still have the bullish divergence. So this is probably the likely case that will end up in the future. Even if we go down before we go up, which would be a false breakdown slingshot cheetah. Slingshot cheetah, baby. Another rock bottom entry. More evidence that I am right here and all of the stuff above is right. Commodities breaking up means you're in a NASDAQ bubble. This here means a NASDAQ bubble. That's why we're getting this. And this also means that we are going into a commodity bull market. The TSX Venture is indicating a melt up of junior commodity miners lies ahead. Shoulder, head, shoulder, bottoming pattern. And we've got a dream within a dream. The big dream is the big boy here. The smaller dream is the shoulder, head, shoulder that we're breaking the neckline here shortly in the near-term future here. We've got the RSI also in a bullish divergent momentum breakout. Let's go, baby. Let's go. Gold to silver ratio is indicating a massive rally lies ahead for silver. $3,000 gold, $55 silver in his opinion. And we could potentially compress this where silver outperforms gold in a gold to silver ratio. Last time we outperformed was the year 2020, all the way down to 2021. Big move. Then we consolidated upward, and now we're trying to break down. Could there be some stuff going on here? There could be. Somehow this went back up here right during the elections. Just so happened. Just by, happenstance, the elections came and they somehow forced this back up into the channel here after this breakdown. Just so happened by coincidence. No problems, right? The Great Marquee, 5, 4, 3, 2, 2.5, 1. Before the bubble pops in the NASDAQ, crypto, and all these other overinflated, high-priced areas. Oil, you are here. We are here in the red. We are now coming into WTI crude oil seasonality strength. So we do consolidate a little bit in January and February, and then we get the big move in February upward for summer driving season. Very nice. Lawrence Leopard, brilliant thread by Tavi here. So today, a new set of structural pressures has brought the US dollar to a critical juncture. We've got the Plaza Accord tech bubble and another tech bubble 2.0. And here we are with rates about to fall. When rates fall, if they were to, so here's a big question. And I don't know the answer here, but the dollar is going to fall here, and they're probably going to have to buy down rates. rates are probably not going to fall by themselves. So they're going to have to do QE. This is where the dollar falls. If they do QE, that dollar is going to fall. And it fell last time here in 2000, 2001. That's when we got the big commodity bull market. That's when emerging markets went crazy. We're in the same thing. The cycle is this. That's the cycle. How do I know that we're in a tech bubble and this dollar is going to drop? How does he know that? Well, let's go back and look. Because we've got a dream within a dream on the TSX Ventures. This here is supporting evidence of a weaker dollar by the bottoming pattern that we're seeing and the accumulation of assets in emerging markets. That's also another thing that we are in a NASDAQ bubble, and Bitcoin is an extension of the bubble, and silver is bottoming against it. That's evidence of a weakening dollar. The commodities ETF breaking to the upside, evidence, weakening dollar, and a shift between bubble categories and commodities. It's all interconnected. Everything I share on this, every single post is interconnected. We're all just nodes in this. Bubble pop of the NASDAQ, crude oil seasonal futures, but that's commodities. So we go look and we look at the history of the dollar here. Now, I don't know if I'm going to go all the way through this thread. I think this one's a pretty big one here. So no major economy in the world today is pursuing such an aggressively expansionary fiscal policy while shouldering an unsustainable cost of debt service. So extreme cost of debt, and this is your government deficit surplus to GDP. We're running huge deficits. Zero is over here, they're not running deficits. Over here, they're running extreme deficits. It says this is a stark reflection of why the dollar has become increasingly vulnerable in the current macro landscape, shedding its long-held reputation as the cleanest dirty shirt. It says this trajectory, in our view, is untenable and will inevitably lead to policies of interest rate suppression, QE, and constrained government spending, signaling a pivotal moment for the US dollar's strength. And you know what else you can use? You can also use gold as a barometer of this. Gold is another piece of evidence as that breaks up, the dollar's, it's going to be done here. It's going to be done for. Trump's choice for Treasury Secretary Scott Bessent represents a significant shift in policymaking landscape. I'm not going to go into all this here. There's quite a bit of stuff here. But that is the next phase. QE, quantitative easing, and it's going to put all the pressure on the dollar to go lower. The ranch lawyer says, don't go to an all-boys high school. Okay, so this goes from, if you could go back and say one thing to your 12-year-old self, what would it be? What would it be if it was your 12-year-old self? And I don't know if I would have done anything different. The only thing I would say is find yourself a mentor, and you're smarter than what you thought you were. You're way smarter. You can take large aggregates of information and compile it better than most other people. You just don't know it yet. That is what your strength is. And then go after the things that you're interested in, which is finance. Engineering is good. Still go through engineering. I think it provides way better education than all the other majors. The finance guys and all those guys are just, that's where like the dropouts of engineering went. Engineering is a far harder discipline, and what you learn is you learn about the realities of the world. You learn where the edges of the limits are based off of physics, chemistry, mathematics. Most everything else is just made up by human beings. History is made up. It's just viewpoints on history by the winners. And looking at finance is more or less just made up by humans as well, and it's just a bunch of theories where they make up these theories, and I'd say a good 90% of them don't hold any water. So do what you're doing, but the only slight tweak I would do if I knew earlier was go into investing finance and that stuff earlier. Investment wisdom, never invest in a company without understanding its finances. The biggest losses in stocks come from companies with poor balance sheets. You can also say in the commodities complex that speculative companies are those companies with poor balance sheets. Also, watch out for ones with a lot of debt. A lot of debt can go bankrupt. P.T. Barnum, no man ever went broke overestimating the ignorance of the American public. The ignorance at this market bubble is insane. Is insane. We've got Grady here, just like silver was. Platinum is also sitting right below a huge blue breakout line, a generational breakout incoming also for platinum. Get ready for the greatest commodities bull ever. It will be your greatest market opportunity in life. We got the squeeze up, big bull market, squeeze up, big bull market coming. And we're going to go multi-$1,000s on platinum. And if we have a problem in oil, if there's a problem in oil that Goring and Rosenzweig talked about in their latest release, this is just going to be amplified. Because what's going to happen is money in the system, lots of printed money, is going to seek value, real value. I'm not talking about BS coin value. I'm talking about real value. Real things, hard assets, food, energy, all of those things. If we go short on energy, guys, interest rates will spike, bonds will go probably to zero, currencies will struggle because they'll go to zero. Then all of that value that's in financial assets there has to transfer into commodities to solve the problem. Here is the problem on top of the problem, though. If we do hit peak oil, and I don't know if we are, but if we do, and we can't, no matter how much you drill, increase the volume or flow rate of oil, I don't know what that does to our system. That means that the currencies that are predicated, the design of the currencies in the system will fail because of the design. You must continually grow it. But if you can't grow GDP alongside, because oil is correlated with GDP and oil is the driver of GDP. If oil can't grow, that means your GDP can't grow. If GDP can't grow, it means your debt is done. That means that these charts here could go up to ridiculous amounts. Ridiculous. And that's also why we have a 45-year cup and handle pattern on silver. You want to know. Silver alert. We are having a blowout again in the exchange for physical premium in silver today. This appears to be someone caught short or bidding up the March silver contract against the spot market. We saw this occur last week, and the previous time was in 2020. This marked a significant rally in 2020, coming from Bob Coleman. Rock bottom entries. The current price action is strikingly reminiscent of the 2010 silver squeeze, with patterns that echo the explosive momentum and sentiment from that era. And that's the same type of setup. Ready again. Silver is giving us just gorgeous, clean, stylish technicals. A really good looking chart. Said 35 was a clear target for previous up move. We got 35.07. Next target is 37 to 42. Stair stepping up, now backtesting quadruple support. Get ready. Here we go, baby. Here we go. P.T. Barnum, Nutty, Michael Saylor, and his cult of micro-strategy serfs are too weak to defeat Minsky. MSTR pounding is just getting started. The greatest fugazi in financial history is about to unravel. He's talking about the bubble in MicroStrategy. Good luck, Michael Saylor. You're probably going to fail again like you did in 2000. It's coming. U.S. demand for electricity will surge almost 16% over the next 5 years, more than triple the estimate from a year ago, driven by new data centers and factories that are going to suck up power, says Bloomberg. Here's another one. I was born in the wrong era. I would have been very successful in the 1950s through the 90s. I just hate everything about this new world of tech we live in. I see nothing positive coming from AI, crypto, social media. It's all destructive to society. He's completely right, and you can prove it. So let's go in and prove it. So whenever something is digitized, this is just a saying, we completely stop using the physical analog version, physical photos, physical CDs. Physical maps, physical newspapers. Next is money. Bitcoin is digital gold. What do you think happens to the physical version? I hate to say it, but these are just pieces of data. And the delivery system is easy. Money, we already have digital money. It's called a credit card. A credit card's been around for a long time. We don't need Bitcoin. It is not digital gold. That's the problem. They're mixing an element on the periodic table with fictitious digits and having value in those fictitious digits. Money is not digits. Now, could we translate fiat paper money into digital money? We already have, and we can send that digital money around. Correct. Money isn't digital gold. Bitcoin's not digital gold. And here's this time spent. So, this is me talking about the decline of happiness in people. So, figure 5.4 time spent on the internet, sleeping more than 7 hours a night, most nights, frequency of in person social interaction across 7 activities, and general happiness. Standardized D scores, 8th and 10th graders monitoring the future from '06 to 2017. So, as internet hours go up, the sleep, in person social interaction, and happiness decline. So, you get worse sleep, you get worse happiness, and your in-person social interactions go down as the internet hours go up. So as we go to this cool digital world out in the future, what that will transpire into is a bunch of people that aren't happy. Because now we are going more and more into social media, more and more into probably fantasy, whatever it is, the virtual world, and people will be less and less happy. At least according to this. And that's before all of the big inflationary moves. So, valuations, optimism, market sentiment, all at all-time highs. You see the writing on the wall. It will always amaze me how a herd of investors can make the same mistake over and over again. It's going to be an absolute bloodbath in the markets when this bubble pops. And he's talking about the price to book ratio. He's talking about the emerging markets being so cheap to the US stock market. All of these things. It's all interconnected. Big bubble over there, boys. Big bubble. And that's all I've got for today. So we're going to edit there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We do have a discount coupon code if you want to check out in the description link what that is. And that's all I've got for today. So we'll catch you next time. This is Finding Value.